And welcome back to the Financially Simple Experience. So we're going to continue our examination of our businesses as we go through what we actually do for clients day in, day out through the business process of teaching people that, hey, you can double your net worth every 3 to 5 years. It can be done. We're kind of pulling the screen back and the curtain back and letting you look at what we go through in real life case study with our clients. So if you'll remember, we've already gone through the financial planning process. We know what we need to accomplish. We know the wealth gap. We've now kind of looked at the value gap from the client's perspective. Now we're diving in to see what is the true value gap and what exactly are we going to have to do to increase the value over this next period of time for our sample client here who wants to retire in 10 years. We want to figure out what we're going to have to do to close that gap. And so I'm going through the 54 points of assessment one by one with you to help you look at what this client's going to face. So we spent the first time looking at the business readiness, and now for the last episode, we begin our deep dive into exit planning readiness. And again, just because you have a business doesn't mean that we're trying to tell you sell it now. Exit planning is good business planning. If you can align yourself where your business is best in class and where it's ready, and you personally are ready when opportunity approaches, then you can receive maximum value for your business and close your wealth gap. But if you continue to chase profits, if you continue to not have a clear destination in mind of where you're trying to drive your business to, then when opportunity comes, you're going to find yourself that the business is not prepared or you personally are not prepared for the maximum dollar value. And thus, you're going to be wanting. So we went through the first 10 parts of the exit planning assessment. Let's continue. We're going to look at our management systems and forecast. Have you prepared a detailed forecast with justifications for the next 12 to 24 months? Let's look out the next 12 months. Do you know where your business revenues, expenses, management is going to be, the overall company should be in roughly 12 months? I'm doing this right now for our mid-year review, guys. It's a lot of work. I think I have something like 15, 16 hours into this thing so far, and our team probably has another, if that much, into this process. It's a lot of work. Have you done that recently? If you haven't, how do you know where you're going? And this client had never done one. They kind of put back of the napkin, so we gave them one. Have you done a pro forma for the next 3 years at least, or maybe longer, on where you anticipate your business going? Remember, I have several episodes on how to conduct a pro forma, how to build a pro forma. If you've never done one, maybe you should. Do you have a scorecard or a management system that I can look at from outside saying how you're doing with your business over time? Can I look at your conversion rates in a graphical format? Can I look at it from a buyer's perspective as opposed to you having to give me all sorts of documents and just take your word on it? Most people don't. And if you do, outstanding. We're actually at this phase in our business is finalizing our scorecard. We are going through an initiative right now. As I've told you on the podcast, this year is all about KPIs. We want to position it to where we can examine the structure of our business from any perspective of the business by the end of the year. And we're on track. We're in the process right now of using our software package to actually pull this together. And this is one of the things that we actually work with our clients on during this particular area, is actually showing them how to determine where they're going, and then now how to start measuring where they need to be. The next section we move into is company documentation. And this is one, friends, that, man, it kicks us in the teeth. Have you printed and have readily available your company formations paperwork? Do you have your articles of corporation? Do you have all the EIN number applications? Do you have them? Can you find them? From a scale of 1 to 6, is your documentation available to prove that your state registry is up to date? Do you have the details of all the key players in your company? Do you have a list of all your business names that it is now and it could have been in the past? Let's look at your intellectual property. Do you have any trademarks? Most people don't. Do you have any patents or documentation? Most people don't. On a scale of 1 to 6, do you have any software copyrights? Most people don't. If you do, you may go in and You may, if you've already been awarded copyright. So we have copyrights for Financially Simple, for the books. We have copyrights for some courses. We have those. So we would score ourselves a 5 or a 6 because they're up to date and they've been dealt with in the last 5 to 6 years. Do you have a list of all the domain names that you have, your website domain names and their expiration dates? Are they up to date? Are they bulletproof? Are they already, do you have the right subtext, the right protection on those sites on a scale of 1 to 6? Most people don't have those things. What about customer contracts? Do you have a single file, a single list of your customer contacts? Can you provide me a list of customers? That means you would have to have a CRM system. If you can, great. Is it segmented? How detailed is it? Can you tell me all their habits? Can you tell me their children, their husband, the wife, the kids? Can you tell me the birthdays, the anniversary dates, their favorite color, their favorite food, and they don't like pineapple on their pizza? Can you tell me all this stuff? Or do you just have their name in your cell phone? Scale of 1 to 6. Do you have a documentation of who your alliance partners are, the people that you work with daily? It may be a concrete firm, if you're in the construction world, that you work with and you know the people down the street that fill the concrete for you. It may be that if you're in the auto repair business, that who your key supplier contact is when the time comes that you need to have something special done. It may be, in my world, the marketing firms or the accounting firms or the law firms or the other business consultants or the strategic value or the M&A advisors, all the various people that we work with as alliance partners. Do you have a documentation of all your major contracts? Maybe by product line? If you're selling goods and services, do you have contracts for those goods and services? When's the last time the contracts have been reviewed? Do you have maintenance agreements? We have several landscapers. I love landscapers. As you know, that's where I started my career off. And they would just go around and, like I used to in the old days, and collect money from somebody. Man, now with these digital CRM systems, we want to have maintenance agreements in place. The more contracts we have, the higher the value. Do you have contracts in place? Do you have warranties or guarantees that's in writing? How often have you had to use those from a scale of 1 to 6? What about customer-related contracts? Does every customer sign a contract? Well, Justin, we just do it on a handshake. Then your value is not going to be as good as it could be. So customer contracts matter. In this particular case, this sample client didn't have any contracts, none whatsoever. And so they scored a 1, and even though they scored a 1 on every single one of these. Let's look at our expense contracts. Do you have all your supplier contracts in one location? More than likely you've signed some sort of a contract, whether it's for your web management, or maybe you have a line of credit or some sort of an account at your vendor or supplier. More than likely you have a contract. Do you have it available? Do you have your leases available? All your contracts for your leased equipment, your leased office spaces, are they in single file location? What about all your insurance agreements? Your property and casualty, all those various insurances that I've spent too many podcasts talking about. Do you have all those in one location? What about your web hosting agreement? Think about that one. Many people don't think about that. On a scale of 1 to 6, if I asked you to see all your agreements, could you get them for me? Let's talk about your personal knowledge. Your personal knowledge. On a scale of 1 to 6, do you understand about the valuation methodology and how it impacts in negotiations? Have you ever done some self-study on valuation? Scale of 1 to 6. Because you're going to need to know this information long before you ever reach the potential closing table. I would say it's going to take you years to get an understanding. The more you understand, the more you're going to drive the value of your company up. Do you understand about the key criteria that a buyer will be looking for in your company? What is the buyer looking for in your company? Do you understand that? If you don't, there's some value that we can add there. Let's look at your systems and processes. Do you have a customer management system, CRM, or contact management system in place? Not just your cell phone, friends. We're talking about an actual data point. Is the inventory that you have, if you provide inventory, do you actually have a regular stock take? Do you know what's actually in your inventory? We did an assessment for a business, and they had $1.5 million of inventory on their books. And we went to the location, and it was literally a warehouse full of stuff that was far greater in value than $1.5 million. And there was no rhyme or reason to what they had. They didn't know what inventory they had. It was a mess. Is the accounting system streamlined to show managed reports such as product, customers, receivables, payables, key percentages like EBITDA, various things of that nature? Do you have a really good accounting system? Not just QuickBooks, friends. QuickBooks only takes you so far. We need to go past that. Is the customer database clean? Is it clean? Is it managed without duplication? Is it accurate? Is everything synergized in that customer database? What about an inquiry database? The people who want to know about your company. Is it up to date? On a scale of 1 to 6, how well do you track that? On a scale of 1 to 6, let's just give yourself a broad question here. All the records that you have for your business, how accessible are they? Are they digital formatted? Are they in a box in the top of your attic? If I asked you to get them, could you get them for me? Let's change over to compliance. Are your tax returns up to date? Most people would say yes. Great. Have you paid all your superannuitization obligations? In other words, have you paid all your unemployment taxes? Have you paid all your profit sharing obligations in your 401k up to date? Or are you going to wait till year end? Are you up to date on your estimated taxes? Are you up to date on your insurance claims? Your annual obligations, are they up to date? What about your employee obligations? Have you positioned and paid all your long-term service leaves? In other words, if they've taken some time off, have you paid them for that? Do you have IOUs with your employees? What about tax? Are your tax obligations met? The VAT tax, the state tax, the county tax, the federal tax, the unemployment tax, every tax that we have to pay. Is it met? Are you up to date? Are you paying back taxes at this point? If you're paying back taxes, give yourself a 1 or 2. If you're up to date, give yourself a 4 or a 5. If you're paid ahead of money, maybe you give yourself a 6 there, even though I don't know why we would do that, but maybe you have. I've seen that a couple of times. Okay, if we were going to improve the profit of your company, let's ask some questions around that. If we look at your telephone, could we change the way your telephone systems are geared to generate more profit? Or do you have the best available telephone provider? Have you recently looked at your insurance to determine if your insurance is the most up-to-date as well as the most cost-effective? Or could we generate additional revenue by restructuring your insurance? Could we restructure your banking to reduce bank fees? Could we perhaps avoid overdraft management? I see this a lot in business where there's overdraft fees. Is your inventory up to date? Is it well managed on a scale of 1 to 6? Are you like the individual that had a warehouse full of inventory? Or is all your inventory in a position where we can see it and know everything that you have? What about the management quotas? Are you behind on delivering the products that you've been paid for? Are you up to date? Are you running a backlog at this point? And I can understand in COVID last year that happened quite a bit, but you should be digging out of that by now. Are all the following expenses managed? Are your expenses managed very well, including payroll? Are you managing the expenses to create a profit within your company? Or can we cut some things, restructure some things, move some people, let go some people, hire some people, restructure the finances, the expense management of the payroll in order to create an additional profit? How are you at managing expenses? Cost of goods. Have you run out to your vendors to see, hey, can we reduce the cost of this goods? Think about an individual who bought a semi-truckload of chlorine for their pool business. That's ridiculous. But ended up saving a ton of money, and now they have chlorine to go through this chlorine shortage that we're dealing with. It is a management of expenses. When's the last time you talked to your vendors about your cost of goods? Are you managing your commission payments? So if you have to pay commissions to salespeople, is it Is it proper? Is it above industry average, below industry average? What about your human resources expense? Onboarding and outboarding employees. Is your human resources in line? Are you giving too much time off? Are you not monitoring the time off? Do you have high turnover ratios? Are you available for government grants, research and development, or government grants? Have you ever applied for government grants? Man, this is crazy when you start thinking about driving the value of a business, that now we got to look at government grants, but it does. We've actually dealt with this a couple of times. If we're looking at our revenue drivers, the things that produce revenue for us, have you fully examined the immediate revenue expansion programs, such as increasing your average value sales? Have you thought about increasing your sale price a little bit? We call this a price increase or a fee increase. We do this often. You increase the fees, therefore you drive the average value on the sale. Whenever we have a buyer that buys a business, this is one of the very first things we look at, is saying, man, they were charging way too low. When's the last time you looked at your pricing? Have you looked at your frequency of purchases? Do you have people purchasing things on a 45-day increment? Can you move them to a 30-day increment or to a 35-day increment? If you could do that, you pick up additional revenue. When's the last time you looked at the frequency of your purchases? How's your customer increasing going? Are you increasing with new customers, or are you flat at this point? On a scale of 1 to 6. Our company's producing like a 5 or a 6. Many firms are not. How are your leads coming in? Do you have more leads than you ever had before, or are your leads waning? For your SIC code or your NAIC code business, is it below or above average for the number of leads you have? And what's your conversion rate on those leads? Are you above average or below average on the conversion rate of your leads? At this point, you may be saying, Justin, I have no clue, but these are excellent questions. Then you need help. You need help. Are you ready to launch into existing markets? Do you have a new product that you can go out to your existing customers with? If you don't, why? You need a new product that you can show to your existing customers. That's the easiest, one of the easiest ways to produce revenue. New products, existing customers. Are you ready to launch your current products into new markets? Are you taking your current products into new markets? We talked about this before in the Ansoff Matrix. We've talked about this. Do you have your current products that you can push into new markets? Never considered it? Maybe you should. What about your existing products into existing markets? Maybe you need to repackage, rejuvenate it. Maybe you need to restructure it slightly and go back into the existing market. Have you ever done that? Have you looked at it recently? Okay. What about launching new products in general? Have you launched any new products recently? How are you scoring in that section? Most of the time, business owners are not doing very good. And so, friends, after 2 episodes now, we've gone through our sample client, and they scored a 32%. A 32%. Now, why does that matter? It matters in this avenue because the valuation metrics say that this business should fall between a 2% or 2 times EBITDA to an 8 times EBITDA multiplier. That's the average in this business. This business is well below average. Well, well below average. They're not even at the 5% range. They're at 3.2, which means we have now just almost 5% of movement that we can move, 5 points that we can move in this particular business without increasing revenue, just changing the structures of the business. All the intangible assets, we can move their business from 3.2 now to 8 times EBITDA. Friends, this is why exit planning matters. Exit planning is good planning. Unless you know where you're going, you're never going to reach there. And I've just gone through literally probably 30 minutes of questioning on the business side of things on whether or not your business is growing in value. And I would dare say that the vast majority of businesses out there are not increasing the value at the rate they could, because you don't have someone who's alongside showing you and guiding you and showing you what you don't know. Friends, this is what we do. I'm showing you the behind the scenes view at what it's like to work with a true wealth planner for business owners. It's a lot of fun. I get jazzed. How'd you do? Do you know? Were you below average? If you were below average or even average,